Hello, and welcome to the webinar, Simplify ACA and W-2 Year-End Reporting. My name is Eric Wallace with Argyle, and it's great to have everyone joining us today. I have a few administrative details to share with you, then we'll dig into our discussion. First, we would like to thank Experian Employer Services for their partnership with today's event. They've been wonderful thought leadership partners to Argyle, and they're committed to providing you with valuable content and a great overall experience. Thank you again to Experian Employer Services. We appreciate you joining us today. We welcome you to stay connected during today's event. For those of you who are active on social media, please use the hashtag ArgyleDigital and follow us on Argyle Exec Forum. Also be sure to follow Argyle on LinkedIn for special announcements. I also wanted to take a minute to touch on our content neutrality policy, which we've curated based on the feedback we've received over the years from our members. Argyle is very proud and protective of this policy, as it reflects our commitment to ensure the neutrality and overall value of the content presented at our events. We've worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we appreciate our members' support of this policy. For anyone who is seeking CPE credit today, you must answer at least 3 polling questions and remain on the session for its duration. Polls can be found under the Polls tab on the right-hand side of your console, right next to Chat. Afterwards, if you're eligible to receive credit, you will receive an email with a link to your certificates. For anyone who's seeking HRCI credit, please fill out the post-event survey that will be displayed on your screen at the end of the event in order to obtain your activity number upon completion. If you have any questions about credits, please email cpe@argyleforum.com. Finally, and most importantly, please submit all questions that come in during today's event into the chat section of the interface. Before we start, we'll have our speakers introduce themselves, then we'll begin our discussion. Mara, over to you.
Thank you. Hello, everyone, and thank you for joining the webinar today on simplifying ACA and W-2 year-end reporting. Our experts will walk you through how to prepare for this upcoming ACA and year-end tax season. I'm Mara Nickel. I'm a Senior Director for Product with Experian Employer Services. I have over 10 years of experience leading product and technology teams, and I am delighted to be the moderator for this webinar today. Gordon, would you like to introduce yourself?
Sure. Thank you, Mara. I'm Gordon Middleton, basically 2 years as a product intelligence manager here at Experian Employer Services, over 20 in the industry dealing with year-end compliance processes. And I, too, am very happy to be with everyone today, and we'll pass it along to Russell to introduce himself.
Thanks, Gordon. I'm Russell Fulfer. I'm the manager for product management here at Experian over our ACA and year-end product lines. I've over 20 plus years of experience. I'll just stick with, I won't say how much the plus is, but we'll just stick with the 20 plus of tax and HR compliance type items. And very happy to be here today.
Thank you both. All right, so we'll move on to our agenda. Today, we're going to walk through a few different items. Gordon's going to kick us off and talk through the history of ACA reporting and what to expect for this year, common employer challenges that you might be facing, interpreting federal and state ACA requirements. Then we're going to pass it off to Russell, who's going to walk through the W-2 tax statements and talk about our key takeaways for today. Just a little bit about Experian Employer Services. We are dedicated to serving employers who are serving their employees at every stage of employment. We have these experts with deep experience within the industry. I highly encourage you to take advantage of asking them questions at the end as well to take advantage of that. In fiscal year 2022, the IRS processed over 160 million federal tax returns for individuals. We know that this is a big pain point for your employees. We know it's a big pain point for you. So we know this is going to be a very interesting and informative and timely topic for all of you. So very excited to kick this off. I'm going to hand it over to Gordon to go into ACA reporting.
All right. Well, thank you very much, Mara. I appreciate that. And let's have a look at our ACA timeline first thing. So back in 2010 is when the Affordable Care Act, also known as the ACA, was enacted, so basically signed into law. Then it took a few years. Obviously, we had some time to prepare for reporting and getting everything ready for our filing and all that kind of fun stuff. Over the years, there's been a lot of discussion about abolishing the ACA, and we've seen a lot of court challenges And I know the biggest one, California v. Texas, was settled a couple of years ago. Haven't really seen any to that level since then. But there have been many changes to laws and regulations surrounding the ACA in that overall time period. So in addition to federal reporting now, there are states that require ACA reporting also. With more and more employees working remotely, it's all becoming a bigger headache and adding more and more complexity as we go along over the years. So last year, a kind of a big deal arose as well with the IRS granting a permanent extension to help ease some of the employer troubles that they were having in meeting those deadlines. So the permanent extension is now in play for the 1095 forms that have to be sent to employees. So employers now have until March 2nd to provide those employees that 1095 form. If March 2nd falls on a weekend, by the way, which will happen next year, I believe it's on a Saturday, the employer will have till that following Monday. So they will have to March 4th to work on feverishly getting those ACA reporting items filed with their state and federal agencies. So one of the biggest changes that we've seen with regard to the ACA reporting overall, in addition to that with that extension, is that good faith penalty relief is now lifted, okay? Meaning that employer mistakes won't be looked at with such a kind eye as maybe they have been in the past. So employers need to make sure that they're paying close attention. One of the best courses of action to take is to document everything, assuming, of course, that you have good processes. We don't necessarily want to document bad processes. So it's good to document processes because if someone leaves, if you've got, say, people that maybe they share a lottery ticket over the course of the week. Oh, you've got a bunch of winners. Now nobody shows up tomorrow. What are we to do if nobody has any documentation laid out? We need something spelled out so that whoever comes along behind us can pick up the pieces and move forward. So lots of things to worry about when we're talking about documenting or dealing with what's a good starting point, that sort of thing. Well, I'll tell you this, how we document matters because it matters as to how we perform. So some of the items that do cause big issues are things like how are codes determined. We want to make sure that people come along behind us are able to pick that up and move forward. So other things such as how do you reach out to employees to correct information rejected by the IRS? Is that done during annual open enrollment? Is it done? Do we send letters or emails to specific employees? That sort of thing. So when we're talking about what's new for 2023 and beyond, well, there are a couple of items that could come into play this year. One for sure will be in play, and that is the new withholding threshold that will be applicable for this tax year. Previously, if you had over 250 forms, or if you had 250 forms or fewer, you could choose to do paper filing, right? You could do paper or electronic at that point. Now, the IRS has changed that requirement for this upcoming tax year to 10 forms or less. So that's going to take a lot of those people out, and it's basically going to be electronic only from that point. I can't imagine there are a lot of people that will have 10 or fewer forms in the aggregate at any rate. So it's basically going to be electronic for most of our sakes on the call. So they changed that requirement. The new regulations also do contain an aggregation rule that combines all tax forms. So that's why I brought that up. For example, if you have to file W-2s, the amount of W-2s plus ACA forms cannot be greater than 10 forms if you want to do it via paper. So therefore, it's going to be mostly electronic processes this year. Something on the horizon to keep in your rearview mirror for now, or perhaps on your front windshield, since it's out in front of us and has not yet been passed, and that is that Paperwork Reduction Act, which is HR 3797. Basically, that's passed the House and currently sits with the Senate, and we will delve into what that looks like here in a second. So basically what that says, and it's an alternative method of furnishing forms to employees. So basically what it does, it modifies the Patient Protection and Affordable Care Act so that employers and health insurance providers are no longer required to mail the entirety of the information directly to the employees. So that means 1095Bs and 1095Cs do not necessarily or would not necessarily have to be mailed out to every employee, okay, unless a form is requested. So the IRS has previously allowed for those 1095Bs to be taken care of in another manner, and those are usually sent by certain health insurance providers and employers, but it now is extending that fluidity to 1095C forms, which are sent by certain large employers. Obviously, your applicable large employers. There are some caveats that come along with that, though, right? Such requests must be fulfilled by January 15th, 30th first, or 30th, not 15th, the 31st. And they have 30 days after the date of the request to supply those forms, whichever is later, by the way. They can request them at any point in the year. The employer must provide by January 31st or within 30 days of that request. Employers and health insurance providers must give individuals timely notice of this option in accordance with requirements set forth by the IRS. So some of the things that employers need to be aware of about these specific defined requirements: the employer has to have a physical address. The font size has to be a certain size. The employer must receive a copy upon request. And of course, a phone number must be included to request a form and ask questions. And then the other big thing, does the employer have the manpower necessary to support and move forward with these kinds of requests as well? All things to consider if an employer wants to use or move to that alternative method, if and when that gets passed. Obviously, we will be keeping a close eye with that specific item, which is currently in the Senate, as we mentioned, and we will make sure to report on that item as it moves forward as well. Now, the current feeling, since it's getting very late in the year and Congress isn't exactly in any sort of situation to be passing things at the moment, even though this bill has already gone through the House, it looks like it's probably not going to be in play until TY 2024 at the earliest. So something to think about there. And all eyes are on Washington, even more so than normal at this stage. All right, some common employer challenges that we see when we're talking about ACA filings. Well, one of the bigger one is trying to figure out codes, right? Derivation of ACA codes is a huge part of the ACA process. And it's the piece that's tied to penalties, right, from the IRS. So we have to be very careful with how we're doing these items and making sure that we're getting the correct information. Now, obviously, we can see there are many challenges to ACA reporting. Determining codes, minimum essential coverage, reporting deadlines, getting the forms mailed to the employees on time, all big deals, and all have penalties associated with incorrectness or lateness, etc. And these are just some of the many tasks that are involved. There's also corrections out there after the initial filing. We want to make sure that everything is processing and everything is documented, and that we retain our IRS and state filing transmission information for at least a couple of years, because we know the IRS is typically 2 to 3 years behind with their penalty notices. So 5 years is a good rule of thumb. Employer reporting to the IRS also has its own challenges, as does state reporting. Hopefully we can gather some information and tips to make this not so daunting as we go through the presentation.
All right, I think we have our first poll question up. In which areas of ACA requirements do you feel fully informed? I already see some answers coming through.
Yeah, I would think it would be harder, personally speaking, to track these items at the state level, but we'll see what people are having an issue with out there.
It looks like we're about tied for both federal and state level, and then federal but not state level. A little bit on neither. So I think there's definitely some need for some information around state level as well.
Nice. Well, that's why we're here today. We will get these folks lined out. All right. And having said that, let's jump to federal ACA reporting requirements. So as we mentioned earlier, IRS has granted a permanent extension to the filing process so that now March 2nd it's to the delivery process. March 2nd is now for delivery to the employees. Now the date this year, obviously, as we mentioned before, it falls on a Saturday. Please make a note of that so that we'll know that we need to get those out there by a specific time. For reporting, the deadline is March 31st. And obviously, we're talking about the federal situation here, which also falls on a Sunday this year. So employees will have until April Fool's Day. Employers will have until April Fool's Day next year, April 1st, to ensure that their reporting is timely. So as I keep mentioning, be sure and document everything. With penalty notices being a couple of years ago, it definitely helps to have that documentation, even for yourself, as much as for the auditor or whoever comes along. It's kind of hard to keep track of items that happened 2 and 3 years ago for all of us, right? So with good faith relief, no longer available, we want to make sure that we're able to show what was done and why, and maybe we can at least look like good faith actors at that point regardless. So beginning this year, as we mentioned, basically paper filing is a thing of the past, more or less. So something to keep in mind there as that threshold drops down to 10 for this year. So let's talk a little bit now about state mandated ACA reporting, which can be the harder of the two, at least from my perspective, to keep track of and to make sure that we're up on everything that we need to know. Because number one, not only can it be confusing or even more confusing than the overall IRS ACA reporting, but we've got each state with its own different set of rules that really adds a nice little wrinkle in there for our diligence, right? So how do we know who and what to report for each state and keep up with the state changes each year? How do we report on only the individuals that resided in a specific state and not the whole employee population for security and privacy reasons, obviously? What if a person lived in one state, then moved to another during the course of the year? Well, these are things we're going to have a look at a little bit overall. Now, here's something to think about too. As of this date, none of these states we're going to be talking about have released any new specifications or updates for tax year 2023. So the information being presented here was basically based on information that was applicable for TY 2022, which should still be applicable moving forward so long as there aren't any really late updates. And usually at this time, by this time of year, most of the large states, I know California last year released theirs in August. They did a slight update in March, but haven't done anything since. We'll be keeping a close eye on all of these things, but it's starting to look like maybe there just won't be an update for this year, and we'll just move forward with last year's TY 2022 information. All right, and we've come up to the second poll question now. And Mara, if you want to read that one out. Or...
I do. In which of these states districts do you currently file? And while we're waiting, Gordon, there is a question in the chat if you want to take it. It's the, while we're waiting, if the employer is late in filing or has some wrong information, who is responsible? If there's a penalty imposed, the employee or the employer?
Yeah, if we're talking about an employer, the penalty will be imposed, the penalty will be levied against the employer if we're talking about late filing and that sort of thing. As a matter of fact, the IRS, with regard to the employee, the IRS did drop that individual mandate penalty a few years ago. And that's why a lot more states got involved in that overall process, thinking, here's an opportunity for us to drive compliance and perhaps get a piece of that pie that may come out of enforcing compliance, right? So at that point is why we saw a few more states kind of jump into that scramble. So it'd be interesting to see who's filing where with this poll.
Yeah, perfect. And it looks like everyone's just about answered. Looks like California has the most amount of answers here, followed by District of Columbia, and then New Jersey and Massachusetts.
Yeah, and we do have a couple in Rhode Island, but California obviously is the biggest, and it's interesting because it is also the most complex with regard to filing. So that's always nice to know as well. All right, we will move on. And since California is the topic we were just on, let's have a look at what they require, right? So here are some things you need to know if you're filing in California. Obviously, some of us may not be there yet, but a lot of us already are. So hopefully some of this will be reviewed. So in order to report health coverage to California, an employer needs what's called a TCC code, which is a transmission code. And there are two of those that they send out. One's a test code and one a production code, right? Each year on December 15th, the production code expires. So in order to get a new code, an employer has to go through a strict testing cycle and be approved. So that's kind of a hassle there. And please note that the test code does not expire annually, only the production code. So knowing this, last year, and here's an interesting thing to keep an eye on for this year. Last year, California granted a 1-year extension of those TCC codes. So if an employer had one for the prior tax year, they could use that same code for last year's tax year. Now, the only thing employers needed to do was testing. So that the only employers that needed to do testing actually had to use that specific code, and that if they'd never reported to California, they didn't have a production code from the previous year. So last year, California announced all these items in August. As of now, as we had mentioned earlier, there have been no updates. So we're all kind of waiting to see what's going on with regard at least to this specific item. As the time gets closer to the end of the year and that December 15th date looms when those TCC codes expire, we would hope that California will grant another year of extension, or at least let us all know exactly what's to be done with the old codes by that date. So the other thing to remember, and I would expect that this may be adjusted at some point as well, but for now, if you have more than 250 employees that reside in California and have health coverage, California said that you have to file the forms electronically to California. So basically, they were keeping that 250 person threshold, and that's still in play. We've not seen anything that says that will be adjusted as yet. I would presume that that is going to happen, maybe not in the near term, but at least to be prepared for the next tax year at any rate. That's something we'll be keeping a close eye on moving forward. So we've got that 250 threshold. Another big thing, if in terms of corrections, 1094C, they're not needed, but 1095C corrections are required. Okay. So California files do require an XML format as well. Now, here's a good thing to remember, and we had some pains going through this in the first year of filing in California, and that is that they're stricter about SSNs and what they will accept when you compare them to the IRS. We had some files that were sent through. The IRS said, perfectly fine. California said, not so fast, my friend. So we want to make sure that you know these items, all right? The IRS will accept with errors certain SSNs, right? So that's the code that they pass out, accepted with errors. California rejects those forms instead, and we do not want to be in a situation where one is accepted and one's rejected. So oftentimes when an employer doesn't have an SSN for a specific employee or a dependent of that employee, they might use let's talk specifically about the dependent first. So if the dependent doesn't have an SSN, the employer might use that employee SSN, not be accepted in California. That would be rejected. There are also a certain number of combinations for SSNs that are not valid. And this is based on 4th and 5th digits of the SSN. So they only accept, and I'm still talking about California, only accept certain numbers in that 4th and 5th digit space. If you don't have a dependence SSN, you can use their date of birth. Okay. Let's have a look at what DC requires then. So the District of Columbia ACA files must be in a pipe delimited format. So that's handy. Let's call for an all new file format just for our jurisdiction. They only accept current year tax forms. For corrections, they do allow both 1094 and 1095 corrections. So both employer and employee. And in order to transmit files to the District of Columbia, you have to have created an account on their little site, which is mytax.dc.gov. And I'm sorry, I didn't mean to use the word little. Nothing little about what's going on in DC. There is not a paper filing or manual option for the District of Columbia. So even if you only have one employee to report, you have to do it electronically. Reporting deadline is May 1st, I believe, even though I think it says April 30th. Well, it actually says May 2nd. It's May 1st this year. All right, Massachusetts, as we move forward. Massachusetts has got its own kind of thing going on. They have their own specific form, the 1099-HC, but they also do use the 1095-B. So basically every Massachusetts resident that has health insurance needs to receive a form because it is required to complete their state income tax. Employees must receive that then, since it's tied to the state income tax, by January 31st. The employer reporting deadline is March 31st. And of course, the insurance carrier has to electronically report to Massachusetts all of those 1099 HCs that were issued. Okay. Now back to the XML file format for Massachusetts, and the file has to be transmitted electronically. Okay. And good thing to know too, as with a lot of the states, there is a penalty. With Massachusetts, it's up to $50 per individual that didn't receive a form, up to a maximum of $50,000. On to New Jersey. All right, for New Jersey, here's what we need to know. Number one, we don't need 1095 forms, but they can be sent if it's easier for the employer. 1095-C forms with only parts 1 and 2 will not be accepted because they're missing covered individuals. They will kick those back. Only can transmit if part of a file with other form contains individuals covered. So in specific instances, you can. So here's other things to notice. And you'll notice some of these larger states are a lot more complex. So we want to make sure to cover all these items that you know what's going on. So you can send the same file, or you can send the file at the same time that it's sent to the IRS, but that would include the whole population. Many companies don't want to do that due to security and privacy. No paper filing, as we mentioned, less than 50 forms. If there are less than 50 forms, the employer has to fill out a fillable PDF, which is the New Jersey 1095 form. Then you have a need for what's called ACA account credentials. And of course, corrections are required for New Jersey as well. And on to Rhode Island. So here's another state. We're back to the XML format again. 1095s only, all that's needed, no 1094s. The CSV format is also acceptable in Rhode Island. Should you think XML is too big of a hurdle for you, you can always use CSV. They will accept the IRS file, so something to think about there as well. No account is needed for the state of Rhode Island, and corrections are only for the current year. You need to contact the state of Rhode Island if you need to do corrections for prior years. And last but not least, we have Vermont, that small New England state, and we'll see that theirs is a bit different. And what would you expect from Vermont? So they have quarterly reporting as opposed to the annual reporting. So basically, employers are supposed to take this HC1 worksheet so that they can determine if any assessment is due for the quarter. April, July, October, January, they have to go ahead and submit that filing. And then, of course, they have to do the quarterly withholding reconciliation, the WHT 436. So just some idea as to what's involved in the overall complexity when we're talking about states and the ACA filing and reporting program. It can be a big headache if you're not up to what's going on, or if you're not abreast of which states have passed their own reporting and filing laws and that sort of thing. So that's absolutely one of these things we want to stay on top of. Even if the federal government wants to say, okay, you no longer need to mail these items out, well, we still don't know exactly how the states would react to that. So that's one of the things to keep aware of as we are talking about more states to come. Well, we don't really know, but prior to 2020, these states were in the queue to do something with regard to ACA reporting. Now, I think maybe something may have happened in 2020 to sidetrack them so that they haven't really worked on this. They had other health concerns they were no doubt involved with over the course of that time. But if the federal government were to eliminate that mandate for the mailings, I could see many of these states stepping to the forefront and requiring something further, much as California did when they found out that individual mandate penalty was going away. So something to keep an eye on to see how that could affect everything nationwide moving forward. So these requirements, remember, are just the tip of the iceberg. So we're talking about things that you need to be aware of. Your enrollment requirements, also, that's going to take X amount of time when you get set up to do that. Registration requirements, transmission instructions, etc. And then, of course, we have to worry about that annual updates, if in fact that they do decide they're going to do that annually, being sent out, and those specifications and how to react to those.
Before we move on, Gordon, we do have a question in the chat. I think we can probably take it now if you don't mind.
Sure.
For state level, is it best for multi-state employers to follow the state they are headquartered? Or would they need to follow each state they have remote employees and or physical locations?
Yeah, that's one of those deals where it's going to be the employee location where they do the work, right? Not necessarily where the company is headquartered. So if you have employees in these states, you're going to want to make sure that you're staying abreast of the situation and the requirements there, because you do have to meet those state level requirements.
Perfect. Thank you.
You bet.
All right. I think we can move on, and we'll hand it off to Russell.
Great. Thanks, Mara and Gordon. All right, so for W-2s, luckily, unlike the ACA forms, these have been around for quite some time. Most payroll departments are well adept at getting these out, and every state has requirements, and these are pretty well known throughout the industry. Good thing about the W-2s is it's been fairly stable for quite some time now in terms of requirements. ACA has been changing their dates and all these other things, whereas W-2s have stayed fairly stable over the last few years. But some important changes are coming up, and we do need to take note. But the overall challenge for W-2s is you've really got a lot of information, a lot of data that has to be, especially in large companies, that has to be made available to their employees by January 31st. And that's not very much time. And then the states also have to be reported on by that time in most cases as well. And so that's a lot of things that have to happen from close of your year in December and through January. It keeps a lot of our payroll teams very, very busy during January for sure. And so, that's always going to be the background of their challenge. So here is our 2023 Form W-2. It should look fairly familiar to most people in the payroll department. It consists of employee demographic information, employer demographic information, their name, address, zip code, that kind of thing, identifying numbers, and then wage and tip information and withholding it on the right upper corner, and then benefit information below all that, and then state and local down at the bottom. There are many different formats that are acceptable to the IRS. You see quite a few of them. All of them have to contain this information. So the other challenges, many of our our employers face, the tight deadlines. We mentioned that, federal, state, and local. The other problem is there's a lot of other deadlines that are going on at the exact same time. So that is always fun, because you've just got so many things going on at this time of the year, including getting ready for ACA. So they come a little bit later, but California, they still have a furnishing requirement for January 31st as well. So a lot of stuff going on for employers during this period of time. And then Gordon mentioned a little bit earlier the electronic filing thresholds. I'll go into it a little bit more. And then really it's after the initial wave, there are the issues of managing corrections, managing reissues, and then managing electronic consent. So deadlines. Yes, January 31st for W-2s. 1099s come at the same time. You get a little bit of a reprieve with the 1099 miss going out to the filing deadline being March 31st. And I know many of our clients have Canadian deadlines as well. So for those of you that have those, those come at the end of February as well. So that's a lot of stuff to manage, even more so for those that have ACA and other types of deadlines as well. And if you miss the deadlines, well, the IRS will penalize you. For the first 30 days, $60 per statement, up to $600. That's pretty substantial penalty there, $630,500. That's quite a bit. And then beyond that, they get steeper and steeper and steeper. So you don't want to miss them. You want to make sure you're paying very good attention to these deadlines and make sure that you're getting your statements out. And keep in mind the IRS, they really want employees to receive their W-2s, because that's the very beginning of the process. They really need those employees to get those W-2s. It's everything in the entire tax system depends on that. So they're pretty serious about making sure that employers are taking all their due diligence to get those out. Electronic filing thresholds. Now this one just came in, and Gordon mentioned it above, and I'll reiterate it as well here for the new regulations that just came out this year. This lowers the threshold from 250 to 10. And this will take in effect this tax year, for tax year 2023. It applies to all these forms and the ACA forms as well. And anytime the IRS changes their thresholds, you can expect states and localities to come soon after. So keep an eye out for that. Many states will follow suit over the next couple of years. All right, our first poll question, or third.
This poll question: how often does your organization file corrections? Seems like they're coming through. It looks like the clear winner here is 1 time a year. We have a few that have said 2 times a year, 1 who's 3 times a year, and 2 that said 4 times a year. So the majority is 1 time per year.
Yeah, and I see that a lot with the companies that we work with as well. It's usually 1 time, but as many as 4 times a year. So that is not uncommon. So let's talk about corrections a little bit. So I took the most common reasons here from the IRS website. For those of you that are doing these on your own, or using some very simple software, be very, very careful if you have to do these by hand for some reason. Just make sure you're formatting properly. You're not putting $signs in the money boxes, omitting decimal places, these types of things. Other things, IRS prefers 12-point Courier font to make it big enough. be careful with the retirement plan box. A lot of times this gets checked when there isn't one. And then, make sure it's legible, visible, and that you're using an approved copy of the Form W-2. Now, here are the ones that we usually see in our business, oftentimes with the employers we work with. The amounts are wrong. It's very difficult. You're shutting down your accounting system and you're moving large quantities of data over to have these printed. Mistakes do happen quite a bit, quite often, but the better you can do this, the fewer corrections you're going to have later on, is what we've found. And so, be as careful as you can, but we also understand you don't have a lot of time, so we got to get them out. We want to avoid those penalties, but this will sometimes lead to some difficulties. And I'd say the biggest one is going to be the employee name, address, and SSN. Just getting the right demographic information, especially if it's a termed employee who's moved. This can sometimes be a real challenge for a lot of employers as they are trying to get these out to their employees. But box 12 is another source of just all kinds of confusion. It's getting that coded properly. Allocated tips, Social Security tips are always a pain to keep track of for a lot of our employers. And then occasionally we do see incorrect tax year. The wrong data got uploaded to the wrong year. There's checks and things like that, but it can cause all kinds of issues when that happens. So for reissues, we see these a lot of times. It's the standard reasons you would always see with reissues, and that is, lost or stolen. They were stolen out of the mailbox or something like that. They're damaged. They got damaged in the mail process and the printing process, so they need to be reissued. Another huge one is a terminated employee. So they've signed up for electronic version, but then they're terminated and have no more access to that version, and so they need a prior year W-2. Oftentimes it's for the next reason. They need it for income verification. They're applying for a loan, student loans, mortgage, things like that, car loans. They've left the job a couple of years ago. They've lost access. Now they need a reissue. They can't find their old one. They need that reissued to apply for those loans. This is probably the most common reason I've seen.
All right, up to our next poll question. What percentage of your employees have consented to receive their W-2s electronically? Looks like we are close on this. Getting all the answers, over 75% seems to be the overwhelming answer. We do have, the next up is like 50 to 74%, with only 4 answers for less than 25%. So it seems like the majority, we have over 75% getting them electronically.
Yeah, that's really, really good. Congratulations. I know a lot of our employers struggle with this, so that's really good results there. There are a lot of advantages to electronic consent for the employee, and I think particularly we typically see much better electronic consent registration for W-2s than we do for ACA, most notably because many people are waiting to get their refund. So they want that W-2 as they're waiting for it, on January 31st to drop for them. So they want to get it as fast as possible. But that's really good. So the electronic consent requirements are listed here, and just to kind of summarize, you could do this a lot of times. You can have your employees agree to receive their electronic format, all they have to do is to demonstrate to the employer that they're able to access them, and they can usually do that in the same platform that they're doing the consent. So that's usually fairly easy to do. And then, make sure you've posted or send some kind of notification to let them know when it's ready, and then make sure that it's a valid W-2 and has all their required information and complies with all the W-2 requirements. So, but it's really more and more companies are definitely trying to get their electronic consent ratios up. It's a more secure way of doing it, of getting W-2s, of furnishing them. It's got some environmental impact of benefits and things like that. So and it's also just a much better way for the employee, oftentimes, if they can get them that way, to get those. But you still end up with the same issues oftentimes with terminated employees, where they've consented to electronic consent, but they don't have any access. So sometimes what will happen in some of the high turnover companies is they will have to send those through the mail when they do a termination, because they can't provide any access to for the employee to be able to get the electronic W-2. And I think that pretty much does it. So I think we're open for some questions.
And we do have some in the chat. So first question, have you known a company ever to deliberately or intentionally not file?
No, I have not run into that myself. So yeah, we would definitely discourage that. Absolutely.
Yes, agreed. The next question is, we struggle at the end of every year to get W-2 sent out on time. Do you have any advice for this?
Outside of finding a good partner that can help you do that, it's a lot of it is just preparation, is what we've seen with most of the clients we work with. It's making sure that you almost have the data ready to go even before the end of the year. It's being well prepared, and having if you're doing printed W-2s, having your print contracts lined up, making sure that you have everything worked out with the print vendors, and then just being able to execute. It's the biggest challenge. I mean, it's the one that I list first, and for a lot of reasons, it doesn't go away as much as the it's been around for many years, since 1948, I think is when they first had W-2 requirements. And as much of the software that's available out there, it's still a very, very difficult one to hit and get in time. But just as much preparation before the end of the year as you can, get the electronic consent ratios up. That will help, because then you don't have to worry about lining up the print contracts and things like that to get those done. That will help quite a bit. But turning over that amount of accounting data in such a short period of time is difficult, no matter who you are. And so it's good preparation. Just get you there as best as you can.
Excellent. Good advice. We do have one for ACA. So what's the biggest mistake you've seen companies make in trying to maintain ACA reporting compliance, and how did they get past it?
Well, a couple of things immediately come to mind. Obviously, keeping track of states and where you need to file is a big one. We heard that question earlier. Do I need to, where my company headquarters is, where my employees are, and then who to include on my filing, that sort of thing. Also, lateness is a big issue, and obviously it's something that we've seen forgiven time and time again in the past. But let me call this out with regard to federal compliance and timelines. So something to think about here. as far as fines go, I don't know that I got into the federal. If you are late or if you fail to file any given year, they have graduated file schedules that go all the way up to $290 per form if you file. I believe it's either August 1st or August 31st. But at any rate, that has a cap on it at $3.5 million. So that's not exactly something you want to play with regard to timeliness. So that's a big item to keep an eye on. As far as how to get past it, I would recommend reviewing resources that are available to you, either free or paid resources. If you've had problems in the past, you're going to need to address those and get those any resources that you have at your fingertips. Please feel free to engage those, get things on track, because you want to make sure that you are timely and correct now more than ever.
I'm gonna keep it on the ACA track for just a moment. So another question: how do you see the ACA compliance process evolving over the next couple of years?
Yeah, that's one of those. We touched on this a little bit earlier. It all depends on what happens with the federal government and whether or not they say employers are going to need to continue to mail out the 1095Cs. Because if they change that, I could see it changing the landscape quite a bit with regard to states. So then it's going to be an issue of, well, what's going to crop up here? What's going to crop up over here? What states are going to do what to react to that? So that could potentially be a very big issue to watch. If they don't change that, I could still see other states that we kind of mentioned, we touched on in our what's next kind of session. It could be states like Washington, Maryland, Connecticut could jump on board with their own filing recommendations as well, requirements, not recommendations. Big difference.
All right, thank you, Gordon. We have a question for W-2s. So this for you, Russell. What parts of the year-end W-2 process are good candidates for automation? What kinds of things do we see?
With the, I would say just the extraction of the data is the automation piece that you're trying to get to. So the data has to be in the accounting system, it has to be closed out, adjusting entries, things like that at the end of the year that have to happen. So once that happens, it's really just the extraction of the data for the print vendors. And again, that's part of some of the processes that are used. And then the creation of the electronic filing piece can be automated, and those can be done fairly quickly. And once they're automated, this will actually help quite a bit in getting the filings ready for both federal and state, because most states do use the EFW2 format. So if you've got a way to automate that, and then you can automate the correct employees getting in for those states, this can make things go much, much smoother.
In a similar vein, if we have a question for, if we have an electronic version of W-2 available, but our employees are not opting in, how can we drive electronic participation in that program? I know we said 75% or more of their employees for most of this group, but I think there's some that are interested in how to drive some of that participation.
Yeah, what we've seen the most success with the employers that we work with is really making that part of the onboarding process. Trying to get that consent at that point, because what generally happens and what drives the rates down is turnover, especially if you're in a high turnover industry. It's constantly having to get those electronic consents, because once you have them in place, and most employees do want them, want to get it electronically, is what we've seen. But they forget, or they sign up with a new job. There's a whole lot of other things going on when you're signing up for a new job. So if you can get that consent right when they come in the door, that tends to, companies that do that and do that well tend to keep their percentage up pretty well.
Excellent. Wonderful. Let's see, like, if we have anything else in the chat. I do have one more for ACA. Are there any penalties for late filing on the state or federal level?
Yes, actually both. We kind of covered that a little bit in the state session, but you want to make sure to check your respective state to ensure that you're meeting that timeline, because most of the states do have their own penalty. And then we touched on the federal one a second ago, with a possibility of up to a $3.5 million fine cap. And here's the thing, that's just for filing. So you could presumably be on the hook for not furnishing as well. So these are things to think about outside just the filing, but both of those are big items.
Wonderful, great. I have one more for a W-2. Does an employer have to provide employees unlimited reissues and corrections free of charge?
Well, here's an area. Of course, the IRS keeps this very vague. They would say a nominal fee, which if you're doing things like you have call centers or staff dedicated to taking in those requests, you know, that nominal fee can get pretty big. I've seen as much as $20 spent on a reissue, or employers charging that much for reissues and corrections, just for the costs that they entail, because there's a lot that goes into reissues and corrections. It more than meets the eye when you first look at it. You need a system where they can be logged in. You need a system that, you know, they can be fulfilled. They come in at all times. They can also, you know, they can come in at any time during the year. Now they'll generally kick up around deadline time, April 15th, October 15th, that time of the year. But it can be quite overwhelming, you know, if you're having to handle that by an email, and then having to go pull those and make those corrections by hand. So maintaining systems for corrections can be an expense that a lot of companies would definitely want to see reimbursed to a certain extent. So the most I've seen is $20. But you are under no obligation to do that unlimited for free. Oftentimes employers will offer maybe one or two for free, and then charge after that. You know, the sky's the limit on what they do.
All right, with that, I don't see any other questions. Thank you both for responding to those so wonderfully, and thank you everyone for submitting such wonderful questions. Just as a reminder to, if you have other questions or you would like some more information from any of our experts, like, please feel free to contact us with questions. You can visit our blog for more information on how to stay informed and up to speed on all of these different topics. And you can also click on the final button over there to be prepared with ebooks and white papers that we have available as well. So that can help with your preparation for the upcoming season.
Thank you, Russell, Gordon, and Mara, for that excellent discussion. And thank you, everyone in the audience, for joining us today for this fantastic webinar. And enjoy the rest of your day.